A $50 billion buyout just lifted Electronic Arts off the stock market and into private hands. EA goes private at $210 a share, and here are the hidden costs to your wallet. PIF, Silver Lake, and Jared Kushner's Affinity partners are the names on the check. People call it the largest leverage buyout on record. Before we go deep, here is why this matters to you. In the next 2 minutes, you will see the simple money lever that can change how your favorite games ask for your cash, and the one investor trap most people fall into when a company goes private. You are getting the headline premium upfront, $210 cash per share, roughly a 25% bump on the unaffected price. The rest of the story is quieter. An LBO is not magic. It is a mortgage on a living company. About $36 billion comes in as equity from the buyers. About $20 billion arrives as debt arranged by JPMorgan. That debt sits on EA's shoulder and it has to be paid from future bookings. The money that flows in from Ultimate Team, season passes, battle passes, cosmetics, and annual report releases. If bookings hum, the math smiles. If they slip, the screws tighten. Prices, bundles, and content gates become the knobs you feel first. There is a soft power layer in the background. The Saudi Public Investment Fund already held close to 10% of EA and now leads the take private as part of a broader push into entertainment under Vision 2030. Call it diversification, call it influence. Either way, when a sovereign wealth fund helps steer a studio that shapes how people spend time and money, it is more than a financial position. It is a lever. Jared Kushner's Affinity partners adds a political echo. Smaller check, loud signal, capital politics, and culture riding in the same car. EA says Andrew Wilson stays as chief executive. That calms the nerves for a minute. Continuity matters for big sports licensees and for partners. But incentives write the real script. Public companies live by quarterly calls. Private owners live by internal rates of return. That difference shows up in what gets greenlit, how long a project has to prove itself, and how fast team rosters move when numbers do not land. Listen to the room outside the board table. Developers here focus on efficiency and wonder which studio is called core and which becomes optional. Artists and engineers think about roadmaps, hiring pauses, and the quiet churn that never makes a headline. Fans feel it as a question. Does new money make the game better, or does the store get bigger? You can already see the split in forums. A little hope, a little gallows humor, and a lot of wait and see. Here is the hidden lever I promised. Live service cash flows are the interest payment on the corporate mortgage. When debt service is due every month, design choices tilt towards predictability. Battle pass calendars tighten. Limited time bundles rotate faster. Reward ladders stretch a little. None of it is illegal. All of it is mechanical. If growth accelerates, everyone smiles. If growth stalls, the pressure moves from the balance sheet into your menus. Now, the personal finance part. Set your line in calm weather. Decide what your monthly cap is for in-game spending and make it boring. If a timer pops up, do not decide under the clock. If a mode begins to feel like work, walk away for a week. Watch what changes. In free-to-play economies, your attention is currency. Spend it like it matters. Let's talk about the ecosystem. Because you cannot buy EA once it is private. If you invest, think sideways. Engine tech, AI asset pipelines, anti-cheat and fraud detection, payment, identity, and licensing partners. When a giant owner pushes for speed and efficiency, the vendors who remove friction often win more business. That is not a recommendation, it is a lens. Build a watch list. Avoid confusing headlines with a plan. Here is the investor trap to dodge. All cash deals can still miss timelines. Regulatory reviews, multi-country approvals, and data questions can stretch closing into EA's fiscal year 2027. If you chase tiny arbitrage spreads without experience, the risk can outweigh the reward. Back to the ground wheel. What actually changes for you? Expect annual sports title to keep their cadence. Expect Battlefield to push hard for a comeback. Expect the Sims community to hear warm words about creativity while monetization experience continue with softer names. Expect cross-platform passes to expand. Expect bundled perks to show up in places you did not expect. Credit card tie-ins, telecom bundles, loyalty exchanges. This is how consolidation shows up in daily life. Not only as a press release, but as a new tile on a menu. If you work inside EA or sell to EA, write your value in numbers. Put a simple one page on the table that ties your work to player outcomes and franchise health. Private equity chapters love proof over poetry. Vendors should plan for contract consolidation and stricter procurement. Be ready to show where you save money or time on flagship titles. A quick midpoint check-in. If this breakdown helps you see the money levers behind the games you play, tap like so it reaches more people. Tell me in the comment section where you think the first change will land. Price, cadence, or content. I will pin the sharpest take. Now back to the story. Two things could slow this deal: competition and services regulators in key markets, and data or online services conditions that change the math. Different countries ask different questions and attach different strings. The timeline can slip. Terms can flex. That is not drama. That is how deals of this size move. Zoom out for the last bit. We are heading into a decade where cultural engines get treated like infrastructure. Ports and pipelines used to be the comparison. Now it is franchises and platforms. Your shows, your games, your feeds, your payments and perks. When the private money meets sovereign money at some choke point, there's always a story on the surface and the story underneath. The surface story is victory, largest ever, record premium. The story underneath is older. Who sets the rules? Who collects the rent? Who decides how much you pay to do the things you love? So here is the play from the couch and from the wallet. Enjoy the games and demand value. Support teams that respect your time. Cap your spend. If you invest, map the tool chain instead of chasing the headline. Keep one eye on approvals calendar. When this deal closes, the story does not end. It begins a new chapter where culture, capital, and power all vibrate in the same frequency. Like and subscribe if you want more hidden money stories behind your favorite companies.